Hey traders, checking in on the stock market today. A lot of bear volume out there, fear very quickly returning, and a complete 180 turnaround from the trading that we saw yesterday. So we got the most likely scenarios of what we were looking at in our individual sectors from the video yesterday. We were looking for QQQ and our EV names to set daily lower highs on their bounces, and we were looking for our laggard sectors, the financial sector, to temporarily top out from being too overextended to the upside. I was not anticipating them to both happen at the same time to this magnitude, but fortunately we were looking in the right direction as for trades to be taking today. So let's check in on where we stand. Let's do a trade review on how the morning started. And our sectors are very differently set up from each other. So it's important to, rather than look at the broader market as a whole, zoom in on these specific sectors and see what the most important levels are. So first, let's break down the sectors that we were looking at. Now, granted, I was not necessarily looking for QQQ to top out today. I was looking at it either today or tomorrow. So we knew sometime in the next couple of days, we know the daily lower high is the most likely scenario, but was not anticipating a complete rejection and a massive amount of bear volume to head right back down to our lows. The first clue was the inability for the bulls to break the high of yesterday. We got up within 42 cents of that level, and then the bears took over and the bear volume started pouring in. So we have our bouncers, which was QQQ, and our EV names, Tesla, daily lower high has been set. A lot of space still above that 619 low, so there is a potential play for a daily higher low off of that level. QQQ does not have nearly as much space. It will break bearish. If it does break bearish, it will break before Tesla does. So if QQQ breaks bearish and doesn't see a ton of follow through, there's a possibility that we look for Tesla to hold a higher low. NIO, same thing. Daily lower high is set at 52.07, and now we're scouting a higher low. Earnings are coming up on Monday, so that's going to be a little bit of a wild card to take into account. Our other names, well, we'll look at those other sectors. So I was confident to be looking bearish our laggard sectors that have been completely all bull for the last 2 weeks. That's where I was confident. If we got the setup that I was looking for, which was a gap up open, again, the complete opposite. So we had the QQQ drop where we were looking for the Tesla bounce on a gap down open. We got that and it played out wonderfully. Again, yesterday we were looking for the exact opposite today. We wanted a gap up open. We wanted things to get as extended to the upside, and then we were scouting short entries. So we were looking at XLF for a bearish entry. We had a gap up open, and the bears had complete control today. We were looking at the cruise liners. Here's RCL with a huge bearish day. We were looking at the hotels. Here's H with a big bearish day. We were looking at the airliners. Big bear day. Look at that top fish. High of yesterday, 27.33. We reject from that level by 9 pennies first thing, and then we drop very significantly. So all of these sectors, these laggard sectors, are looking for daily higher lows. So again, the opposite of what just happened. Within the next day or two, whether it's tomorrow or whether it's Monday, we're scouting for daily higher lows on XLF, the airliners, the cruise liners, everybody that we just looked at. So I know that there's going to be some bullish entry opportunities in these names sometime in the near term future. As far as what I did this morning, I was focusing on either XLF short or RCL short. And this is how it played out from the chat room here. Let me make sure I'm not blocking it. So we've got at 9 a.m. setting my game plan. I'm not trading much today. I knew I wasn't going to be sitting at the computer all day like I am Monday through Wednesday. And I'm scouting a short in RCL or XLF. I'm only going to make one attempt. I'm not going to sit here and constantly try and short against a really strong sector. I'm going to make an attempt. If I nail it, great. If I get stopped out, I'm not going to keep trying for it. So I would be more comfortable if RCL were gapping up more. If I were to play it, I would make one entry just under 100 and one entry just over 100, and then put my stop loss in the low 100s based on dollar risk and risking a day loser if I were to stop out. If I were going to play XLF short, it would be with larger capital due to the less percentage moves that it sees, less volatility. So then the bell rang. Entered first 1 minute. Entered short RCL. And why did I enter right away after 1 minute of trading? Because the bulls shot up and they just got even more extended, which again is exactly what I want to see happen. We also have 100 psychological resistance looming. So oftentimes you will see this goes in both directions. You'll see a psychological level and we'll break it right before a bounce, or we'll break it right before a pullback, which is why I wasn't basing everything off of 100 psychological, because I knew there would be a possibility that we broke 100 and that would be the climax top before a pullback. So I ended up getting an entry in the 98s. I would have entered one more on a 100 break, and then we hit a new low of the day. And we initially held the low of the day. This 1 minute candle right here, it held the low of the day, and I thought, I really wanted that low. So I said I really wanted a new low of the day there. We held that support, but the next minute we rolled over. And at that point in time, I said, okay, I didn't get my second entry. That's just fine. Only one entry for me, putting my stop over 100, because at that point, if we were going to go from a new low of the day back over 100, that would be a big red flag for me as a bear. Fortunately, the Bears had absolute complete control of this name all day. We dropped over 10%, and I am very comfortably profitable in this position, and I'm swinging it short. The reason I'm swinging it short is this is now my hedge against my long exposure. So I've been talking about the last week how I went from a net short exposure in my portfolio, and then the last couple of days I've leaned towards a net long exposure. And on today's trade, I am very fortunate that I made this RCL short, because if I didn't, my account would have dropped a solid couple of day loser pullback. So this trade today would have been a 2 to 3 day maker for me, and instead my account today was up maybe a 60% day maker. I'll still take it on a bloody red day like today. The fact that I have more money than yesterday, that's a win in my book. But because my portfolio was leaned towards the long side, my gains in my RCL short were essentially just offsetting the losses that I had in gold going down, silver, my SPY long-term no-touch position, and my MSOS USMJ positions. All of those were going down. So RCL gains only offset that to a certain degree. So let's now do our regular technical analysis. I'm going to cover RCL tomorrow. It's just a question of whether I cover it for an hourly lower high, higher than where we stand, or if we get a little bit more downside. Because again, RCL is looking for a daily higher low. So SPY right now is seeing a lot of bear volume. Look at that volume. We cannot disregard it. Volume is our proven indicator, and we just saw the most volume that we've seen since our all-time high little climax top back in November. So that's a 3-month high of volume, and it is vastly bearish. If we see a bear break of 380.20, we confirm another lower high and lower low, and we zoom right back out to the weekly. We're still watching anything above 368.27 as a weekly high or low. We're still watching weekly EMA 12 support, but again, it's a very significant turnaround, and if the bulls were going to be in complete control still at this point, they certainly were yesterday, but it would have been a pullback on normal volume, looking for a daily high or low, and then trying to change the daily trend back to the bulls. Instead, we got the massive bear volume, still holding our recent low, but again, fear is back in the sector right now, or fear is back in markets in the short term. As far as the narrative, a lot of people are looking at the US 10-year yields going up, and that being a reason. The narrative there is people saying, okay, we made a ton of money in the stock market the last 10 months. Let's take some money out of the stock market, and now we're getting better yields in these bonds. Let's move some money over into these bonds. That's one narrative. The other narrative, GME. GME, I was watching it today, and we were trading inverse to SPY on shorter term time frames fairly often. And the last time we saw this massive short squeeze, it was almost like we were correlated to the VIX. We pointed that out multiple times, where it looked to be that degree of correlation. So people are looking at this and saying, is GME exposing underlying issues in the entire stock market world and leverage and things like that? That's a possibility. What it boils down to for me, I don't care why. I don't care what the reason why anything happens in the stock market is. It's nice to know, but I see CNBC constantly grasping for straws to try and explain price movement, and I feel that my understanding of price movement, just accepting it for what it is and taking it one day at a time, is the way to approach these markets, and that's the way to stay unemotional, because as soon as you have narratives, you can attach emotion to those narratives much easier. Another thing about bonds, it's just not my wheelhouse. I have never made a trade in 10 years of trading that had bonds factor into my trade. So I'm not saying they're not useful. There's a lot of traders that I'm sure get a lot of use out of looking at the bonds, but I don't. So what the bonds are doing does not really matter to me. what the price action of our individual sectors is doing, that matters to me. So we're watching that low into tomorrow on SPY, and the S&P 500 futures bulls are praying for some relief tonight to try and hold this support level and see a little bit of a bounce to give some space above that support level. But that support level is certainly on watch tomorrow. IWM, same thing, big bear volume and a big pullback looking right back down at our lows, 215.56. So we know what our key short-term support levels are to be watching tomorrow, and it's just going to be watching to see, do these levels hold or not? If we break this support on IWM, we're looking right back at the weekly EMA 12 and our last weekly higher low of 204.84. So even if these recent lows break, yes, it's definitely a little short-term red flag, but we are still watching our weekly uptrends at this point. If this bear volume continues, definite red flags for the possibility of losing weekly uptrends, but only if this bear volume continues. QQQ, so again, right back down to our low, 311 support. If 311 breaks, we are potentially losing the weekly EMA 12 support for the first time in 3 months. That would stand out to us. From there, I would zoom out to the monthly time frame, and we would be scouting a monthly higher low compared to 260.11, but again, a massive shift in the tech sector, most notably with Apple confirming a weekly downtrend, one of the most important stocks in the stock market as far as weightings in ETFs are concerned, and the weighting in SPY, the weight in SPY, and we are in a weekly downtrend. We lost the weekly uptrend. We lost weekly higher lows for the first time since we bottomed in March of 2020. So again, that is very notable, and that is definitely a red flag that's firing off for the tech sector. Amazon just lost its monthly higher lows today. That's the first time that's happened since our March 2020 low. Financial sector, again, tons of space for a daily higher low. When the light's on my face like this, I just see all the spittle. I wonder if you can see it on this camera. I apologize if that's the case, but I'm adamant. Animated is the word. So we're looking for a daily higher low, anything above 31.77. We're watching first hourly oversold conditions. I will not play first hourly oversold conditions in these names as aggressively as I would if we were seeing the broader market holding on just fine. When everything is dropping at the same time, again, all of our major sectors were at the low of the day at the same time, that instantly fires off our cautionary red flag signal, and that instantly makes me more protective as a bull. So again, if QQQ were still bouncing on the daily, and if SPY only pulled back 0.5% today, and the financial sector looked like this, I would be looking to buy the dip on hourly oversold conditions tomorrow. But if tomorrow all of our sectors are red again and there's still high bear volume, I'm not going to buy these hourly oversold bounces, because that tells me that rather than bouncing from maybe 29, 28 RSI, that RSI can drop down to 23, 21. So that just is an automatic extra caution for me when the market environment is as it were today. Healthcare, right back down, daily bear flag, lower high and lower low. We are in a weekly downtrend in the healthcare sector. It hasn't had a huge impact recently, but it definitely is a point in favor of the bears with the daily and weekly downtrend. The biotech sector, decent bounce. Question is, can the bulls hold the low 144.59? Bulls would have to hold these lows and break the highs of the bounces to significantly shift momentum. But as we head into tomorrow, all the bulls want to do is hold support. Just hold that support, stop the bleeding from today, and try and alleviate some of the fear that is very quickly returning into these sectors. SMH, we had NVDA bearish earnings reaction, daily lower high is set, and now we're looking down at 232.88 support. If that breaks, we zoom out. We are still in a weekly uptrend with 224.93 as the most important weekly support level. TAN in the solar sector, could this be a daily bear flag? Absolutely possible. We're looking down at our low of 91.51. We're watching the correlation with QQQ. Again, it's QQQ, Biden names, which are MJ, solar, and EV, and our laggards, everybody else that we talk about. So MSOS had a red day today. Daily lower high is set, and we're looking back down at our low. It's doing the same thing as SPY, same thing as QQQ. I'm being very patient. I definitely would like to add more for a weekly higher low, considering that even where we stand right now, we can drop 18% and still be in a weekly uptrend, but I'm saving entries for closer to weekly EMA 12 support on a pullback. The VIX, there's your big green candle and there's your decent close. Again, because all of our sectors were at the low at the same time. So there's our follow through. 375 is the most important level from here. And the question is, can we get 2 of those candles in a row? We have not seen 2 of those type of candles in a row since back in October. So it's been 4 months since that has happened. So tomorrow's a pretty big day. We're either going to fall through SPY and QQQ daily supports and continue the daily downtrend and head into the weekend with fear palpable, or bulls are going to hold support and give a little bit of comfort into the weekend. Those are 2 very different psychological standpoints to be in as we head into next week. The dollar, bouncing. So, still care about the weekly more than anything. It's all about 89.20 or 91.60. One of those 2 levels needs to break, and the bulls are attempting a weekly high or low, but a lot more follow-through is needed over the coming couple of weeks. If the weekly trend changes, for me, that's definitely going to open the possibility that our top in markets is set for a longer period of time. Metals were down today. Look at that beautiful rejection on gold from our falling wedge, and here we are right back towards that support. So the metals are seeing weakness with the broader market. Assets correlated. The cryptocurrency is seeing weakness. I'm all cash in the cryptocurrency space after trading some nice volatility the past few days. I have a very short-term mindset in the crypto space as long as there is fear in the broader market. But gold is looking down at the support line, and we're just going to watch this falling wedge until we break it one direction or the other. So support is approaching. 4-hour RSI is approaching oversold as well. Bulls need to, they don't have to hold this low, but if they break it, they can't see any follow through. Silver 12-hour higher low was set, and here we are potentially confirming a 12-hour downtrend. We're looking at the low of 27.24. If that level breaks, we're then looking back down to 26.48. I've had my IRA, some money in GLD and SLV for a long time, it feels like. 6-8 weeks maybe even a little bit more. Maybe probably 8 weeks. And it's just doing nothing. And it's just affirming to me why I love being a day trader. That money is sitting stagnant. It's gone up a couple day makers. It's gone down a couple day makers. But I am not making any progress on that trade. It's just ping-ponging back and forth. And it's wasted capital just sitting there. Now, I'm not going to exit that trade unless my levels are hit. But it's just a reminder to me why I love being a day trader, because I can move in and out quickly, capitalize on volatility, and not have things just stagnant and wasting away. Miners, right back down to the lows. Again, watching the similar pattern to gold. And if gold does not break that falling wedge bullish, these miners are not going to see much upside. Oil still holding on, and the energy sector pulled back with our laggard sectors. Oil did not pull back. But again, we're just looking for a daily higher low in the energy space. Oil hit a higher high. Anything above 58.60 is a daily higher low. No red flags on oil at this point. There is a potential rising wedge to be watching. When things have been really bullish recently, rising wedges have broken bullish. I would like more touches on this support line, but I am watching this pattern over the next 24 plus hours. Natural gas. I'm glad I'm not trading natural gas. This would have faked me out. Look at this falling wedge break bullish. The red flag was this double top here at 295, but it was a clear bull break that dropped right back down to lower lows. I absolutely would have taken a loss on that trade. But I may never trade natural gas again. We'll see. Still in a daily uptrend, but time's running out here to set a daily high or low. And again, once we do, we know we're just looking for a daily lower high to be that most likely scenario. So again, pretty solid day. It's been, if you've been watching the last few months, I just want to reiterate that I make things look really easy. I've been on a 5 to 6 month streak right now that I've never experienced in my life. I've seen bigger gains in a shorter period of time in the crypto boom and the MJ boom, but those were just blue sky euphoric markets And it's very different than the last 6 months, which granted, yes, it's been a very forgiving bullish market. But the past 6 months, I've been trading in both directions. I've been trading a bunch of sectors, and I've never experienced this consistency in my life in 10 plus years of trading. So you watch these videos and it seems really easy. I nail the Tilray top. I nail the Tesla bounce. I nail the financial sector top. But this is me being in the absolute peak of my game after 10 years and well over 10,000 hours. So I just don't want you to be looking at this and saying, what I do want you to be saying is, I can do this. But it needs to be more than that. I can do what he does if I put in thousands of hours. Absolutely. Years. We are talking literal years. If you put in 3, 4 plus years, you can get to a level where you have extreme confidence in markets. Absolutely. I don't want you to be looking at these videos and say, damn, makes this seem really easy. I can do that right now too. Because again, it takes literally years. So stick with it, because when you hit that flow state, and when that flow state lasts months, it's a thing of beauty. It's the golden touch. Can't do any wrong. Just win, 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 win. And newer traders experience that for shorter periods of time. You know, I've had a couple month streak over the last couple of years where I have been in this state, but never for this length of time. And I know I'm going to lose it eventually. It's just essentially how much time can I put between when I make my next solid mistake? And this is just the longest it's been. So I could go back and look at my last decade of trading, and I could pick out 10 5-month periods where I'm going red, green, back and forth, lack of consistency, stubbing my toe, frustrated. And this is just the golden zone right now. And it will end, but enjoying it while it lasts. Put in the time and effort. You can see it too. Years. Years and years. I'll start filming some stuff in the yard for spring over the next month or so. Until then, I'm going to keep recycling older videos. The bulbs are all starting to pop up. Mom and dad geese came back yesterday. Hopefully they make some babies. Turkeys are still hanging around, but there's not a ton going on. I still have a bunch of work to do preparing beds, laying down some mulch. I'm going to do more flowers than vegetables this year. Last year I grew more vegetables than I could eat, and I couldn't even give them away. So we're going more flowers this year, more pollinators, and looking forward to it. It'll be less effort. This time last year I had, my grow lights inside, and I had my seed trays all going. I was moving seed trays inside and outside. It was a lot of work. I essentially wanted to prove myself, what can I do in this space? I proved it, and now I'm going to take it a bit easy this year. But there'll still be lots of content. Have a good day.